Good morning, all. It's about 10 to 8 on Friday, the 14th of January. So, this is probably the most important chart Forex-wise of the day. It is the daily US dollar index chart. Now, as you know, the euro US dollar has been trading sideways for such a significant period of time. And I had said that when it breaks, we need to be able to jump on the trade and run it for probably a significant period of time. And what you tend to find is the dollar index is often a close to mirror image of the euro US dollar, because the euro is the heaviest weight in the dollar index. So often these are kind of mirror images of each other. As you can see, the dollar index broke through this support level here and continued lower. I think this is also important. We've got a trend line going all the way back to May 2021, last year. So it's quite a significant trend line in terms of time. And that's been broken. We've got a 23.6% fib here, which was also broken. We really have broken the uptrend, I would say. We're testing the 100-day moving average, and it is holding at the moment for the dollar index, 94.60. But I think any bounce back, for me personally, would be an opportunity to sell short or add to a short position in the dollar. It does look like we're going lower. Now, if I'm wrong, and this 100-day moving average is the low for the move, well, I guess we'll find out soon enough. If you think it's the low for the move, then you can gamble on that. But I personally don't, and I think we should probably be heading towards the 500-day moving average, which is the green line. Anyway, we're not massively oversold, and I just think this pattern was took such a long time to form. Bit of a descending triangle here, actually, and then the break below the base, I think, sends us lower. So that's my theory for the day. I'll just close that. So what have I got here? Germany 40. I don't actually want that at the moment. So as you can see from the hourly chart, the euro has pushed higher significantly from our entry point, which was around here. Oh, it certainly was for me anyway. You can see I've got some orders, buy orders there. And we pushed up. Now we've slowed down as we've hit the 100-day moving average on the daily chart, as we're heading towards that anyway. So that is holding us back a little bit. We're getting a bit overbought, but as I say, I don't really think this is the end of the move. I think really it's just the beginning of the move. Less than positive candle yesterday. We've pushed up, although we closed higher. We didn't close near the top of the candle, but I'm not too concerned about that. We're overbought on the daily chart, but only beginning to get overbought on the daily chart. 4-hour chart, I don't see any particular negative candles that would make me feel concerned, so I would still be a buyer on any weakness. And as you know from my trade sheet, I have support around the 114.00 area, 113.90, stop below 113.65 should give us plenty of room if we do get an opportunity to buy back into longs, but I don't really think that's going to happen. Okay, what do we look at next? So the Aussie dollar is starting to trend higher. I think that trend can continue. I'm partly influenced by that dollar index chart, of course, which indicates the US dollar will go lower. So I'm happy to be buying into longs on a dip. This is the 1-hour chart. You can see the 50-hour moving average holding beautifully as a support level. If we dip as far as the 100, then I've got some orders in there, as you can see anyway, to jump in around 72.40, 72.30. To me, that looks like the best buying opportunity, but we may not even get that. We may just hold the 50 and keep going. So if you think that the Aussie can push higher against the US, you might want to just buy a little bit here around sort of 72.80, and then, which was around the support level I had yesterday, actually, but I changed the big support level to go down to 72.40, 72.30. So I'm hoping we get down there, but there's nothing to say that we will. For the Aussie yen, again, starting to build into maybe a bit of a short-term positive trend here. I've got support down at 82.20, 82.10 around here. If we dip that far, that's the daily chart that we're looking at. Let's see what we have on the shorter term charts. Yeah, the hourly chart's not really showing much. We've had quite a dip back on the hourly chart. 4-hour chart really is just showing a sideways trend. So I'm not, this isn't one of the more exciting trade opportunities I've got, but I just think that's a decent level if the Aussie yen does dip. Now, the dollar yen, let's have a look at that one. There we go. Dollar yen. Okay, let's have a look at the daily chart. Let's zoom in on that one. Oh, that's the wrong way. There we go. Okay, we'll zoom out so we can get a bit more of a perspective. So you can see we are in something of a bull trend, although we're getting significant pullbacks, a bit like this one. So I have got good support, well, quite a long way down. I've got support down at 113.15, 112.95. So we'd have to see a little bit more weakness before I'd be prepared to buy into this bull trend. On the short-term charts, of course, we can really only see that correction in the very short term that we have. It's got a little bit oversold here. I see resistance around the 114.30, 114.40 area, which is around here. So my trade entry points are about 50 pips off at the moment. Now the euro yen, we've got support around the sort of 130.10, 129.90. So it's just below this previous low down here earlier in the week. I think that should be quite a good support level. We've got a moving average there as well. So I'm going to have to sit and wait for that one too. We're not so far off there, 35 pips away or so before we could start moving into a long position. I haven't put any index. I have got some more Forex trades on the cheat sheet today, but I haven't got any more index trades or any index trades on there. I'm really in a sit and wait game, but things could certainly liven up. Look at the stock. Look at the S&P. I've talked about this potential head and shoulders pattern forming. Let me just draw that for you in case you're not clear. I've talked about it. This could be the left shoulder. This could be the head. More of a flat head, isn't it, really? And this could be the right shoulder. Now, it is actually developing as I thought it might. We've still got to wait because, let me put a proper line on there. Right, that's what I wanted to do. Because we need to wait for a break of the neckline, which currently for the cash market is around 45.90, 45.95. So we've got quite a way to go before we even test that. I wouldn't even be surprised to see us bounce off it at first, maybe up to sort of 46.70, I don't know, somewhere around there, and then break it. Too many people would be expecting it to break on the first go, and that often doesn't happen. It's kind of tying in with the 100-day moving average, which is tracking along that line. So it's an interesting development, not something that I can particularly trade at the moment. We're kind of in no man's land. In fact, that 1 hour chart probably gives us a better perspective of the head and shoulders pattern, does it? You can see the price moving below the moving averages on the 4 hour chart now. On the 1 hour chart, sorry, there's the 4 hour chart moving below them too. So we'll see how that develops, but it's definitely something I've got my eye on. Nasdaq, I feel, has got a slightly negative tone, but I'm just not ready to get into a short position yet. I could argue that this is a double top, not a huge one, but I could argue this peak is just a little bit below the all-time high. But we do seem to be, well, clearly this low is a lower low than these two, and then the rally couldn't be sustained, so we've got a lower high. Now it's a weak argument on the daily chart, I have to say. I'm not really comfortable with jumping into a short position yet. Into a strong bull trend, it doesn't really make any sense. I mean, obviously, when we look at the weekly chart, there's no question that this market is in a very strong bull trend, and it's entirely possible that we're witnessing the beginning of a bear trend. If you fancy that idea, you could always jump into a very small short position and just monitor it. Oh, hang on, gone too far there. But clearly, I'm just getting a slightly negative feel. When you look at some of these weekly candles, we've got a bearish engulfing candle here. Okay, didn't follow through with anything particularly negative, but we're just struggling. We get a big blue candle, and then we're followed by a big red candle, and that isn't something that we've seen very often in the Nasdaq. We usually get a pullback and we rock it, and once we get the big blue candles in, they usually followed through. So I feel there's a slightly negative tone to it. I just can't get myself into a short position yet. I think I have to see something develop further, but I definitely wanted to warn you about that. Germany 40, again, I could argue that there might be the formation of a head and shoulders pattern. So again, slightly negative tone to things in the German market. I think it's fair to say that this peak is lower than the all-time high there. Yeah, just a slight downtrend on it, or at least a double top. So just slightly negative. Now, this could just be a consolidation band. We could just trade up and down within that band and then break either way, I don't know. Or I could argue that it could be a head and shoulders. But no matter what, if we do break this lower trend line, then of course that would be negative, whether it's a head and shoulders or whether it's just a channel. And that on the cash market is around 14,000, around 15,000, isn't it? Break of 15,000 could send us down a bit. So there's just some negativity creeping into the stock markets, but it takes a very brave or very stupid person to just pile into a short position on relatively weak arguments. So that's not something I'm going to do, but definitely something I want to make you aware of. and then we'll see how things develop. And we might get an opportunity like we did in the euro US dollar, where this consolidates and it breaks, and then we wait. It could be days or weeks before it breaks, and then we get the chance to jump in, and then we get some quick money out of it rather than just piling in now, hoping that things break. Okay, so that's my thoughts for the day. You've got your cheat sheet, you've got your trades on there, and you've got your analysis. Hope it all helps. Good luck and have a great weekend.